Hey guys, All in Crypto here, and welcome back, ladies and gentlemen, for another YouTube video. I hope you've all had a smashing start to your weekends. This is going to be our daily cryptocurrency market update, and apologies for it being slightly later on. Just been a very, very busy morning, so we're going to fly through everything, really get you up to date with what's currently going on. You know, Bitcoin has essentially had the worst quarter in a decade, and we're going to talk about that. You know, really explain why that is, and it really relates to the stock market. It was a very, very for me, the catalyst to cause Bitcoin to go lower is the stock market. I think the stock market, certainly the Nasdaq, has a long way to go, and it was really annoying actually how the Nasdaq and S&P closed yesterday as we go into a long weekend, because it's kind of left Bitcoin and crypto in a bit of a kind of limbo. You know, it didn't really show too much weakness. It didn't sell off hard, but it didn't really show a lot of strength. So we're in this kind of no man's land, if you will, for the crypto space, I think, moving over the weekend. Ultimately, we do have the bias that we are going to roll and see downside. You know, I'm not bearish on crypto long term. I just think that we have to deal with the situation that we're currently in. And we've looked at things like dollar liquidity, you know, really understanding that markets are driven by money coming in and out and interest. And right now, that interest just simply isn't there. Not only that, if we look at dollar liquidity, it's the lowest it's been in a long, long time. That doesn't really, you know, March 2020 onwards saw huge amounts of dollar liquidity pumped into markets. We're not there. You know, we're almost the adverse of that currently, which doesn't really allow for a flourishing market. I think crypto is very vulnerable, certainly if the stock market sells off. But I'll overlay the Nasdaq with Bitcoin just to really reiterate that point. You know, Bitcoin came around in 2008. Markets really since 2008 have just gone up. Now, you know, that isn't the case. So the overall market, we're at $864 billion in terms of market cap. This was $3 trillion at one point. You know, what comes up often comes down. And the thing is, you know, the reason we come down a lot harder or I should say a lot faster than it takes us to go up, is because fear is a significantly stronger emotion than greed. And we're seeing the likes of Three Arrows Capital still play a role. You know, we've got Voyager temporarily suspending all trading. There was rumors about KuCoin, but these were just total rumors. People really love to, you know, add fuel to the fire, essentially, when this sort of stuff happens. You know, crypto hedge fund Three Arrows Capital is now officially filed for Chapter 15 bankruptcy. So it's all been a real cascade of things that's taken place. But we will drop down the timeframes for Bitcoin. Let's just cover the news. 5 reasons Bitcoin had its worst quarter in more than a decade. Well, forget those 5 reasons. We've given you one. What we're going to do is overlay the likes of, we can use the Nasdaq. Look at what markets have generally done since Bitcoin. You know, obviously Bitcoin didn't come around in 2013. It was out significantly beforehand. But this is the Nasdaq, and you can see that, you know, it's essentially just gone up and to the right whilst Bitcoin's been about. I think that we enter, you know, we've not seen a recessionary period and how crypto really reacts in that kind of an environment. And I am very much confident that we are heading into a recession. I speak to everyday people. I can't tell you how many people I know that get paid on the first of the month and have no money a few days after, because everything's just so expensive. You know, it's all about liquidity and money going in and out of markets. And I know it sounds doom and gloom, but the good news is we're going to get an opportunity to accumulate cheap crypto, knowing full well that it's not going anywhere and it's going to play a substantial role in all of our lives. This is from Lynn Oldham. This is your GDP now, real GDP estimates. So this is essentially, you know, the economy essentially you're looking at here. And you can see just how quickly this tanked. This is Atlanta Fed GDP now estimates. You can see just how far or how fast, I think Lynn Oldham tweeted this saying this has escalated quickly, how fast this has sort of downturned. And it's really because of everything going on. You know, things are clogging up. Things are getting expensive. We still have high inflation. We're now getting squeezed with interest rate hikes and money becoming more expensive. You know, it's not a great time for markets. On top of that, we've got what I believe is a failing stock market. I think the stock market is going to see some real pain. And I think that drags Bitcoin and crypto with it, certainly when you look at the correlation. This is from the Efficient Market Hype. Stocks historically haven't liked it when HY spreads are 400 basis points more than IG. So you can see any time that this has gone up and you've seen this spike, you've essentially, this is the HY versus IG spreads. If you don't know what it is, it's not particularly that important. But as a kind of metric, you know, every time this gets above this sort of 4 mark for 400 basis points, you know, it's not a good time for the stock market, and we're heading that way now, guys. And this is, for me, in regards to the stock market, this is only just, you know, beginning to get started. We've spoken previously about, you know, looking at other recessionary areas, how they typically look. You always get a bounce off your 200 EMA, and then the reality of the situation sort of hits, and you can see that over here. Still bouncing off it now. You know, people look, trading almost becomes a bit of a self-fulfilling prophecy in the sense that everybody looks at the same thing. Yeah, so people will go, oh, well, historically, or certainly, you know, for the past 8 years, talking about the fact that markets have only really gone up for 8 years, since 2008, the 200 weekly moving average has been a good buy. Completely different environment now. This has been a good buy when you've had the sort of Fed at your back. Now they're very much against you. And this is just another indicator of this. I found this very, very interesting, actually. Was that the plan all along? Sharp recession into the summer, followed by Fed pivot and monetary stimulus into the midterms. So I believe the midterms are in November. You know, could this have just been a popularity plan? I don't think so. And I don't think that this is the plan. But, you know, a Fed pivot would certainly see me redeploy capital into markets. Because, again, it's all about liquidity. Interest rates inherently, the reason they drive the dollar up is because the demand gets really ramped up, because you need more dollars to pay back the debt that you've essentially taken out. I'm not actually taking a look at the 10-year yields, but it is sort of coming off. Issue is, I think this goes higher. You know, I think bonds are in a world of trouble, and this was a capitulation trend ending event, you know, March 2020 and so on. What else have we got for you? Of course, cryptocurrency, 3 Arrows Capital files for Chapter 15 bankruptcy. June gloom takes on a new meaning in another 2020 down month. Yeah, the thing is, it's like, you know, back to what I'm saying, what's the catalyst for this market running now? You know, I don't think there is one, and we will drop down the time frames and look at what we're currently doing. Ultimately, I think we roll. I think we get to 15K, and I think potentially, you know, there are lower targets, but we'll deal with this market as we move forward. Voyager Digital temporarily suspends all trading, withdrawals, and deposits. It's really not a good look when you give your money to somebody and then they essentially stop you from accessing it. I mean, it's criminal in actual fact, in my opinion, totally criminal. It's, you know, I don't know how this is even allowed for you to give your money to these institutions or these companies and for them to just go, yeah, we're just going to stop you from being able to withdraw it. No. You know, that in my opinion is absolute theft, and there should be jail sentences on the back end of that, I think. You know, that's genuinely how I see it. You know, when is it? I mean, it's not unusual in history. Historically, we've seen that banks have actually done this. You've given them your money and they've stopped you from withdrawing it because they haven't had the funds available for everybody to withdraw. Similar thing going on, but for me, it's theft, complete and utter theft. And we've got the grayscale, of course. We did highlight this in a couple of videos ago. Faces an uphill battle with lawsuit against SEC. Good luck, guys. You know, I think that's a bit of a zero-sum game, fighting the SEC. I understand that kind of stupid that we do have a futures ETF and not a spot ETF, but I think a spot ETF would really give that. I don't think the SEC want to endorse Bitcoin like that before they've kind of regulated. But at the same time, they have also said that, you know, Bitcoin is the only real cryptocurrency that they're looking at that they believe is a commodity. Let's drop down the time frames, take a look at some of the structure that we're currently in. We did kind of give this play. What have I got here? Previously, that this was quite a likely scenario. You know, you're just very, very, very much bear flagging right now. Just like you did over here. You know, very much a bear flag, and ultimately this is going to roll, in my opinion. And certainly we've got the 4th of July, so markets aren't going to be open this weekend. But after this, for me, this rolls. You know, can it consolidate for a period longer? Absolutely. Do something like this. let your EMA creep up, but then you get that roll and you get that spill to the downside. And again, talking about volume. Give me 1 second, guys. Talking about, if you look at your volume, you know, where did it occur? It occurred on the down move. It's very, very weak, lackluster volume. And ultimately, you know, if you look at this as a move, you went up. What did your volume do? Went down in a kind of deviation fashion. Then you started to sell off, and then you saw your volume tick up. It's really a seller's market. You know, if you're using volume to predict what direction this market goes in, look at where the strength is. Ultimately, volume is going to tell you who's doing what. And for me, pretty obvious that, you know, this is a downtrend and very much a seller's market, and the confidence is very much behind the sellers, and that shows up. So that's really all I've got for you in this video, guys. Hopefully you all have a smashing Saturday after that. And I'll catch you all in the next one. Thanks a lot for watching, ladies and gents.